Melissa, thank you very much. And Rob, it's great to see you. I got to say, I was surprised on the call not to hear more superlatives about the amazing results in Singapore, because as far as I can do, I did some quick research. There has never been a hotel casino property anywhere in the world in any quarter that achieved what you did. $768 million. No. It's a big deal.
You're absolutely correct. I've been doing this 40 years. No building anywhere in the industry came close to these numbers. It's an incredible performance in an incredible market. We're very lucky to be there. Right place, right time, right market. But you're right. The numbers and the performance there it's historic.
Okay, well, some of it was luck. And you said high hold to the tune of 100 million plus. That being said, when you're guiding to $2.5 billion in adjusted property EBITDA in a year, how do you keep fueling that?
Well, obviously, you keep providing experiences people want to come to. The market in Singapore is extraordinary. We have a great building. So you keep doing the right things by your customers and keep hoping they show up. And I think we're doing that. And the momentum is with us, and the building is superb. So to your point, it is historic. It's unprecedented. And hopefully it continues. We believe it will. We're just in the right place, the right time, and we're very fortunate to be in Singapore with an extremely supportive government, and tourism there is booming for the super luxury customer.
And we're showing right now some of the renditions. You're pouring in and just back from a groundbreaking in Singapore because you're going to invest $8 billion in a new property in Singapore. So clearly you're expecting a return on that investment. In the meantime, in Macau, you were getting a lot of questions on the call because you said right at the top there's been a shift in strategy there. What was not working for Las Vegas, Sands, and Macau, and how are you changing things?
Well, the market's gotten more competitive in Macau, and we may have been reliant on our buildings, which have always been best in class, best in market. We've shifted our strategy. We had to pivot away from that approach and add our buildings to a more competitive approach, which we think will fuel more EBITDA, more market share. We'll do fine in Macau in the future. We'll come back. We took too long to get there. We're there now in the right place as far as our competitive environment. And I think the future of Macau remains very bright. It's always been our premier market. You couple that with what we're doing in Singapore, we'll soon be exceeding our highest EBITDA creation even during the pre-COVID years. So it feels pretty good both in Singapore and Macau for the future.
We have just started to see month over month the kind of gains investors have been hoping to see post-pandemic in Macau. How much do geopolitical concerns weigh on you there? If there's the tit-for-tat tariff war, if China and U.S. relationships are not solid and strong, is that something that affects the property?
Well, obviously, we need a very strong China economy. We hope that these countries will resolve their differences, the tariff war will go away. But it doesn't help us because we need a strong China economy to prosper. And we are seeing, in spite of the geopolitical concerns, we are seeing a much stronger Macau, as you alluded to, and hopefully that continues in the future. A $32 billion market in Macau would make all the difference in the world to us and the competitive set. And I think you'll see that. Macau is just too powerful. It's the primary place to gamble for mainland Chinese and for most Asians in that region. So obviously we want to see resolution of the geopolitical issues, and resolution is good for the whole world. Hopefully that comes to be. And a strong China economy is very important to us too, obviously.